Hello, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about 4 different companies that's very attractive right now because the stock market had a big drop today, about 2% to 2.5% as of this making of this video. So we're going to cover why exactly the stock market is down today, and we're going to talk about the 4 different companies that are very attractive because of this downturn of 2%, 2.5% today. But before we get started, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. So you see here the overall stock market is down. You can see here the Dow Jones is down 2.57%, the S&P 500 down 2%, and Nasdaq down 1.65%. So you can see here, this is the Dow Jones chart. Even from the lows of September 23rd, the Dow Jones actually still up about 3%. So it doesn't mean that the Dow Jones won't fall back or even go even lower, because a lot of things are going on right now. We're going to go over some of those things later in this video. And you can look here at the S&P 500 as well. From March 23rd low, it's up still about 5% here, even though it's down 2% today, but still up since the March or September 23rd low. And the Nasdaq, you can see here, it's still up 6%, 6.44% since September 24th, September 23rd. So overall, the market is still up. You can see here, has been up very nicely for the past in a 1-year chart. So that's positive there, but it is down a lot. 2.6% for the Dow and 2.1% for the S&P 500. And some of the big reason for that is because you can see here from Seeking Alpha, the market is seeing broad-based sell-off as COVID restrictions in Europe ramp up and the prospect of any breakthrough of fiscal stimulus talks deemed over the weekend. So basically what's going on is that Europe imposed this new restriction as COVID-19 cases soar. New regulation and social distancing rules are being introduced across multiple European countries in an attempt to stop the spread of the situation as a second wave of pandemic accelerates across the continent. Europe reported more than 1.3 million new cases last week, and the highest single week count yet, according to the World Health Organization. So a lot of things in Europe is going on. Spain is increasing restriction. You can see here Spain Prime Minister declared a national state of emergency on Sunday, which included a nighttime curfew and possible travel restriction between regions. Last week, Ireland became the first country in Europe to reimpose a lockdown in the face of soaring cases. So overall, this is what's driving the market down, because Europe looks like it's going to be closing down soon. But that's, I don't see this happening in the U.S., but I do think it presents a good buying opportunity for some different companies. So we're going to look over some companies that looks very attractive because of the sell-off. My favorite company right now because of the sell-off is AbbVie. AbbVie is very attractive right now. This is yesterday's or Friday's closing price. As you can see here, earnings yield is 12%. Dividend yield, very nice, 5.6%. So you could have a high expected rate of return, about 42.9%, if the company reverted back to its mean of about 12.8, where right now it's about an 8 PE of 8.3, and it's down about 1.3% or so. So it presents even a better opportunity at today's price. Another company, Bristol Myers Squibb, down about 1.6% as of today. You can see here, earnings yield expected to be 9.9% with a very nice dividend yield of about 3%. Blended PE currently at 10.07, which has a normal PE of 18, so it's very undervalued. And you can see here, if we were to revert back to this mean, you could have a 100% return in a year or two, so that's very attractive for Bristol Myers. A+ credit rating company, decent long-term debt to cap ratio, very favorable. I like it at 50% or lower, so very good, very attractive company. So this is a good company here at because of the current sell-off, about 1.3%. It sold off today. This was Friday's closing price. The third company that's very attractive right now, AT&T, is down 2.17% as of today. This was yesterday's closing price. based on or Friday's closing price. Based on Friday's closing price, you can see here had 11.68% earnings yield, and with the being down 2.2%, it's going to make it even more attractive, maybe around 12% earnings yield. The dividend will be increased as well, 7.48 as of Friday. It's probably 7.5, 7.55 dividend yield. Triple B plus credit rating. Decent long-term debt-to-cap ratio under my criteria of 50% or lower. So very positive. You can see here, analysts, if you were to revert back to this mean of 12.13 and currently has a PE of 8.5, you could have a total annual rate of return of about 25% for the next few years because of the fact of the valuation. So it makes this company, AT&T, very attractive at current prices. So let's look at the fourth one. The fourth one that's very attractive right now, one of my favorite company here, Lockheed Martin, ticker symbol LMT. You can see here, the company is actually down about 2.8%, almost 3%. It's going to make it even more attractive at today's price. This was Friday's closing price. It had a blending PE of 15, 6.4% yield, and a decent 2.78% yield. And they actually increased it about 8%, between 8 and 9% earlier this year, a few months ago. Debt to cap is pretty high, but it has a good credit rating of A-. You can see here the company will revert it back to its 5-year PE average of about 18.9. You can have a nice total annual return about 19.9%. And again, this is from Friday's closing price. So with today's price being down about 2 to 3%, brings it even more attractive at today's prices. So Lockheed Martin, is a very attractive price right now. As you can see here, there's been times when it got to a 15 PE and it bounced right back. So I could definitely see that happening again. And if it goes even lower, even more attractive. So there you have it. Those are some of the reasons why the stock market is down today. Those 4 companies I personally own in my portfolio, and I'm very excited to maybe buy more shares of these companies. And I think you guys should definitely check them out. They look very attractive at current prices. Overall, there's a lot more other companies that are attractive as well at current prices because of the slight downturn, and they haven't really increased since the March low tremendous. They've been kind of flat. But I think these 4 presents great buying opportunities. Make sure to check out and do your own research on them. So I hope you guys enjoyed this video. If you did, hit that like button and check out my free ebook in the description below. And if you're new to the channel, make sure to hit that subscribe button, and I'll see you guys in the next one.